So this is a short video about explaining what is a dividend. So companies work for an entire year, and at the end of each year, company executives will report to shareholders. As part of that report, company will issue a balance sheet and an income statement and a cash flow statement, actually. So we can access the financial statements via the US Securities and Exchange Commission, and that's the website. And I actually provided a screenshot of it so you know what it looks like. And the income statement will include all generated revenue and all expenses. And at the bottom line, it will actually tell us the total income that the company has made. Now, that total income actually belongs to all shareholders. And there could be millions of shareholders, and the total income will be divided among the shareholders per share basis. Company will organize an annual meeting for all shareholders once a year, and it's referred to as an assembly. We, as the shareholders, can attend these meetings, and we get to vote. Not every common share may have the privilege to vote, although most of the time it is how it is. But there could be some stocks that prohibit or that limit the ability to vote. But in general, common stockholders do vote on meeting business, but there are exceptions. Company executives will ask shareholders what to do with the annual income. So they could pay all of it to shareholders. They could keep some of it and then pay some of it to shareholders, or they could just keep all of it in the company for reinvestment. So when the income is kept in the company to be added to the operations, to be reinvested in operations, this is referred to as retained earnings. And income can be paid to shareholders as cash, and this cash payment is referred to as dividends. So not every company pays dividends, and not every shareholder wants dividends. Dividends can change. And dividends can be paid in any frequency. They could be monthly, quarterly, annual, or they simply not pay. Companies can pay special dividends one time, and they could just have extra income unexpected, and they just don't want it, and they could just pay it to the shareholders. So dividend is an income for shareholders, and shareholders pay taxes on this income. So if you think about it, and I don't want to have the dividend, for instance, then I'd be actually receiving a dividend that comes from a company that pays dividends, and I have to pay an income tax on it. So some shareholders just simply don't want the dividends. There's a double taxation argument, or a fact. Corporations pay income tax on their annual income, and dividends are actually paid after tax corporate income. And then as a shareholder, when I receive dividend on the shares that I own, now I have to pay taxes on them. And so the corporation pays taxes, I pay taxes on the dividends, and this is referred to as double taxation. So thank you for watching. Bye now.